Okay, family, welcome back to yet another powerful episode here where we are focusing for this market for this week. Of course, there's a lot that's happening. It's interesting that's happening. We're just gonna jump straight into the calendar over here. We do have the US government data shutdown that has really impacted NFP as you've seen it. I did announce it on our community post on our Instagram, Facebook, everywhere that you should be aware that NFP was moved. So those of you who are trying to trade NFP, guys, yeah, and you didn't see that, please do pay attention to everything that we post on this channel. Switch on your notification bell, subscribe if you're new. And yeah, just to touch on the events that are coming on this week, of course, other currencies such as your NZ, I mean the New Zealand dollar, that we do have the RBN, one of the most powerful events. Guys, this moves as much as NFP, like, or even more. So if because right here we do have NFP, it might not come through, guys. It might be delayed, it might be revised, it might be cancelled, it might be pushed back. So we don't have a definite assurance that we're still gonna be getting some of these US dollar events. So I encourage you trade some of like the NZ. I know for South Africans this is early in the morning, but if you wanna make money, you would definitely make it a priority. Okay. And now the shutdown impact, let's see how this can translate economically into what we can receive of the markets. Just before I get into some technical analysis over here, know that when such things happen, it may mean that for the gold in particular, it can be a safe haven. So we can see an increase in demand toward the gold. For currencies, especially dollar-based currencies, we can see that they can either range or short-term sells. Okay, either range or short-term sells. Now, this is uncharted waters for me. It will be my first time going through what we call a US shutdown. So it's yet to play out, but based on research and economics, I see that can be a thing. And then, of course, for indexes, there can be a lot of uncertainty. So you can see sales starting to come up. So I'm going to be starting off DXY. The dollar index is going to tell us for everything that is off the dollar base. I'm on the daily time frame here. I want to break it down as of smart money wise. Now, just to see what happened, in fact, of last week over here, we started off, and these are the few candlesticks that it created, and it closed off bullish in that case. Now, I'm seeing a very clear fair value gap here. I mean, it's catching my attention. It's screaming to me directly to say, yes, look at me. Just before I can look at this fair value gap here, we can see I try by all means to make sure I understand structure, to interpret structure quite well in terms of validating. We can see we had higher highs over there, we got lower lows, we got lower highs, and of course now we just created those equal highs, equal lows that I was speaking about last week. And as you can see, we're sort of in that pullback, and then we can be in that impasse. It makes sense to break it down this way. In fact, we do have this break of structure here that is quite clear to the eye. And now that being said, it sort of creates for me a directive, a bias that I want to stick to unless the market proves me wrong. Okay, so in this case, we do have that fair value gap there. That's quite very clear. This is the daily time frame, and I can see the market reaching towards that within this week. So I can still see the dollar before it drops. I can still see the dollar possibly reaching to this, taking all of this highs here as liquidity, filling up this fair value gap and selling. Okay, that's what I can see possibly from this point. We can go all the way to the 4H over here, and we can see the market has been quite ranging for this few weeks, a few false breakouts. So definitely there's a lot of liquidity here hanging on that the market will want to take. And then, of course, use that and then actually sell these markets. I'm not quite sure exactly how much liquidity or momentum, rather, we can have within this week. But if we can have a lot of momentum to push these markets up, possibly late within the week or next week, we can actually see sales taking place for DXY. But so far, I can say if we can just use this breaker right here as the market breaks it. If we're going to go straight into detail, we can use that breaker, and then we can actually retest that breaker and go further up. Let me take my zoom tools, okay, something of this sort, and then go further up. And as the market reacts off this fair value gap, it's not just selling blindly on a dollar pair like USD JPY using DXY. It's using that and saying, you know what, as the market turns around, go to a lower time frame, let it break, change of character, let it retest, and then you can actually enter off a small supply in that case, given that will be enough confirmation. Rejection candlesticks, yes, are enough on the 4H time frame, definitely to look out for that, triple R rejection, reduction, reversal. But otherwise, the lower time frame can be quite good in terms of receiving a change of character to confirm the trend reversal of sales. Okay, just before we go to the next pair, guys, I want to tell somebody you're entering a season of abundance. I don't know who that is for, but as you're watching this, just know that whatever you're about to do, it's going to just lead to a season of abundance. Things are just about to be easy for you, cruising for you. Okay, gold now. As I said, gold, we may see it as a safe haven. That means we may see gold reach for new highs. And as I specified last week, I used institutional levels to predict gold because in markets like this, we cannot particularly use structure. The only point of reference in terms of structure is this high that we took, this low, and of course, we've been trending up ever since. Yes, it's quite a steep trend, meaning it's showing me weakness as we're going, but it's gonna keep on stacking up. It's gonna keep on stacking up. Now, as I did promise you guys a video about gold institutional levels, I'm gonna be dropping it as of Tuesday, the 7th of October. So look out for that. If you're a first-time viewer, look out for that video. It's gonna help you greatly in navigating these uncharted waters and taking advantage of the demand. Now, how it takes place is that we use institutional levels. So in this case, we are heading all the way to 4,000. We're adding in 50s. So in this case, we're heading to 4,000. Let me just mark it properly, and then I can just edit the price there to give us a straight whole number 4,000. Okay. That's the price we're heading to, the price that it used, the last point of reference. It should be on 3,900. There we go, 900. Let me just find those. Okay, because we're on the daily time frame, I just have to make sure I have everything set out. Okay, 3,900, that's the point. Let me go all the way to the 4H so we can see price take place quite clearly. And then, of course, we are tapping into another price point here, which is 3,950, okay, somewhere here. So we can see a bit of resistance coming in correlation to what we got of DXY is that we can have that temporary push up on the dollar. In this case, we can have that temporary pushback of gold over here so that it can further buy more. So in this case, I'm looking at it using this point, pulling back into these areas, and then possibly do something like this. Okay. Of course, from then on, but what is quite relevant for us in this time period is that if we can just get, in fact, it already sort of retested that. So we might be not even going all the way, maybe somewhere into this prices over here, and then it can pull back. Another thing that I like to use is a Fibonacci, where you can just take a Fibonacci level, and then you can see exactly where it can retest. So something like this, as we're seeing points of rejection, retest somewhere like this, pull back, and I would like to catch more buys at this point once it has broken this highs. Then I'm looking at targeting from 3,950 all the way to 4,000 in terms of that price. Okay, so that's it, what I'm seeing for gold. It has not proven structure, has not given me much in terms of course, we can see here higher highs. It's still quite bullish. There's no chalk. It's screaming bulls, bulls. It's a safe haven, guys. I don't like assuming, I don't like creating what we call confirmation bias. I just like to go with what the market is showing me. If we do break this 3,900, that can be a change of character. But otherwise, it's still showing us a very strong bullish sentiment. Okay, let me know what you think about that in the comment section, guys. Now, let's go to NASDAQ. I wouldn't be doing you justice if I do not include NASDAQ over here. NASDAQ as well, it's quite trending up, but I do sense that we may actually get a pullback with broken recent highs in terms of structure. It's not at least as a mystery in terms of gold. It's quite still clear. We still have a recent break of structure here on the daily time frame. With that, I want to go all the way to the 4H. We can see that we still have recent higher lows. Uh, as you can see, this facilitated last week to break those highs. We suddenly just came back here into a sort of fair value gap. Okay, we slightly touched it. We slightly touched into this fair value gap. And what I get is that the market can actually still come back, use some of this supplies over here, fill it up, and actually sell all the way to fully mitigate this fair value gap. In fact, we do have a breaker, or some of you can say order block, then we can actually get it pushed up. So if you can have that temporarily sales that happen, I think it can take place within 1 or 2 weeks, if depending on the momentum, guys. As I said, it's uncharted waters in terms of economics wise, but this is what I see. If we break this point, then that will be a change of character on my case. This is just liquidity for me. This point here, this is just liquidity. As a market, I wouldn't be interpreting that as a change of character. It's just liquidity that I see on these markets. Okay, let me know, guys. I can't zero in much on Nasdaq. This is what structure is giving us. Although we can trade intraday based on what price is giving us, and we take that and we just scalp. I am going to be risking 1.5% on all of my accounts as soon as we get NFP, because NFP acts as an indicator, guys, of what is going to happen on the market. So it usually gives me a fundamental catalyst. If it comes out negative, I know what to expect for that month. If it comes out positive, I know what to expect for that month. So since it has not come out, a lot of traders who are economically inclined, not just technically, because technically is dumb money, right? When you mix fundamentals and technicals, you become a little bit way smarter. You understand what has to happen with the intrinsic value of price as you trade it. Okay. Nevertheless, guys, thank you so much. This is your brother in the kingdom, Emmanuel Mohale. I will see you guys on the next video. God bless you.